The infinite banking concept is a method that allows one, the individual at the you and me level, that allows one to control the banking function as it relates to them in their life. And it uses dividend paying whole life insurance issued by a mutual company. Although banking's not a product, as often said, it's a process, no question about that. The title, The Infinite Banking Concept, was on purpose. Infinite, not finite. Banking, the movement of money. Nobody's going to go start a Federal Reserve System bank. Banking in the movement of money. And concept is an abstract idea. So the way you may practice the infinite banking concept in your life will be different than the way I may practice the infinite banking concept in my life and how I've integrated it into my financial life, my personal life, my home, my business. So they shouldn't all be identical. They shouldn't all look exactly alike. But the underlying control that one has or can have with the infinite banking concept is unbelievable. The infinite banking concept solves for several problems, issues, and concerns in one's life. Number one, it allows them to actually control the banking function at the you and me level. If I go to the bank and borrow money, the lender, the third-party lender, whomever they are, is going to control the loan repayment, the duration of the loan, the collateral, everything about the loan process is controlled by the third-party lender. It puts the control of the banking function at the you and me level, to you, the owner. That's what it does. Those are some of the problems that it solves. It also solves over a lifetime the headwinds that we all face: taxation, inflation, and the cost of lifestyle. The infinite banking concept is different from the way people traditionally bank today in several areas. Number one, I don't have to ask permission to borrow money, and I don't have to cough up required collateral and abdicate my control over the banking function. I can control that. And so that's the main difference. Most people use banking today as a place to deposit money, withdraw money, write checks on an account, borrow money from that bank, the third-party lender, where the difference with the infinite banking concept, whenever I have dividend-paying whole life policy structured properly for the infinite banking concept, now I'm just changing the words of the cash flows. It could be a mind game. I don't care how you classify it. If I make a deposit in a bank and I make a withdrawal from a bank, I'm building capital and then I'm liquidating capital. With the infinite banking concept, I pay a premium, therefore I build capital. Instead of a withdrawal, I collateralize that value. It never stops compounding and growing. It does not interrupt the growth of that. I'm not liquidating the policy. I'm collateralizing the policy on my own terms. And then I'm borrowing against the cash value. So now that requires a loan repayment. All right. So the cash flow in is a premium, a cash flow out is a loan, and then an additional cash flow in is a loan repayment. Compare that to the traditional fractional reserve banking system. I make a deposit, I make a withdrawal. I make a deposit, I make a withdrawal. I may get a loan from the third-party lender, then that therefore requires an additional cash flow, the loan repayment. I'm accumulating capital or value, and then I'm liquidating it over and over and over and over and over. Compared to the infinite banking concept, I'm accumulating capital and I'm not liquidating it. I'm collateralizing it. Within the infinite banking footprint, within the infinite banking concept footprint, two different footprints, okay? The term properly structured, specifically designed, they're very broad. More narrowly, what is a properly structured, designed, dividend-paying whole life insurance policy? And that's very unique to you. We're all at different ages. We're all at different stages financially. And the different ages mean, you may have more years behind you than you do in front of you, or you may have more years in front of you than you do behind you. Duration is totally different for everyone. So is your unique financial position, whatever you've been doing, how do you integrate this concept properly into your financial life? Maybe you're just starting out. We're all different. So properly designed is very specific to you. Your policy should not look like my policy, and my policy should not look like yours or yours and yours. They should all be different, uniquely custom designed, in a word, specific to you in your family, in your life. The components of a properly structured dividend-paying whole life insurance policy with the intentional use within the infinite banking concept footprint where you can become your own banker. Two primary components. Number one, a whole life insurance policy, often referred to as a base policy, has a base premium. And then an additional PUA rider, paid up additions rider, is added onto that base whole life policy as a rider. And then to get that done in today, and this is 2026, and it's been this way for over a decade, you have to introduce an element of term, a term rider or a blended PUA rider with a term component, where the term component is blended with the paid up additions rider. Those are the primary components of a properly structured or designed policy to practice the infinite banking concept most successfully. I don't want to give the idea that one particular way is best. All base premium is best. The majority of a PUA is best. Your unique situation, circumstances, duration, ability to pay premium, how big do you want to create a system, all of that matters on how policies are designed for you specifically. The dividend, when it comes to the infinite banking concept, we're using dividend-paying whole life insurance issued by a mutual company. The difference between a mutual company and a stock company, and there are only two types of life insurance companies, is the ownership position. A stock company is owned by shareholders. I can go buy shares on the open market. Mutual companies are owned by the policyholders. Now, you think that one through. I am in an ownership position of the company. The company exists to deliver a service, a product, and make a profit. They share those profits, their financial experience, with the owners. And that is a dividend to me, an owner. I'm sharing in the financial experience of a life insurance company because they're a mutual company. And then I direct that dividend to be paid not to me. I want it paid directly into the paid up additions rider of the life insurance policy. So there's only two components that cause the growth, the cash value growth of a life insurance policy, and one of them is non-guaranteed, and it is the dividend. Properly structured dividend-paying whole life is used with the infinite banking concept because it has all of the characteristics that are required for a banking entity. Nelson clearly demonstrates that in his first work, Becoming Your Own Banker, and further explains and shares in his second work, Building a Warehouse of Wealth. Two books that you should get your hands on before the sun goes down. If you were to become your own banker, what that actually means is that you have the authority, you have the contractual right, you have the ability to control the banking function as it relates to you in your personal life and in your profession. And might I say, you'll profit from it. The infinite banking concept is not about avoiding banks. The movement of money exists 24/7, 365. Capitalism, socialism, it all requires the movement of money. So we cannot ignore the bank. But using the bank for checkings and savings is about the extent. Whenever you can become your own banker, you have enough capital in your ownership or your control where you're not dependent upon the third-party lender. Life insurance companies cannot inflate the money supply, which is very important. When I collateralize a life insurance policy, it's because it has cash value. So it has a value. A loan provision in the life insurance policy, which is a contract, gives the owner the right to collateralize that cash value. And exactly how it works is I'm collateralizing the cash value of the policy, exercising a contractual right that I have with the life insurance company, and I'm not liquidating those values. I'm just collateralizing. They're still growing uninterrupted. I'm just collateralizing them. The infinite banking concept is suited for everyone that has cash flows in their life, income, expenses, passive income, and quote unquote retirement, legacy. If I have an interest in transferring wealth efficiently to future generations, everyone should look. My humble opinion. And to truly understand the infinite banking concept, the mindset that will serve you best is the willingness to unlearn something that may not be true and to learn something that's counterintuitive and 180 degrees opposite of what you've been taught about money. An open mind. There is the problem. It's between our ears, between my ears, between your ears. That's the problem. And being open-minded, whether you ultimately agree or disagree, take an unbiased look. The most basic and common misconceptions that surround the infinite banking concept is number one, life insurance is the world's worst place to put money. And number two, you can control the banking function. And most of us don't even know what that means. But if you continue down that thought, just consider this. With all of the professional designations within the financial world that exist today, CFP, CHFC, CFA, CLU, CHFC, RFC, all the rest of them, they talk about life insurance at the most fundamental and basic levels. The cost of the death benefit. Term is cheaper than whole life. No kidding. Term, temporary, is less expensive than permanent. Whole life. No question. Not one of those designations ever spend any amount of time on banking, quote unquote banking, or controlling the banking function. And neither do the top 50 books in finance, personal finance, retirement planning, investing that you can go buy on Amazon today. None of them address the banking function. If you're skeptical, if someone's skeptical about the infinite banking concept, which I promise, when I was first exposed to it, my encouragement is to set aside your preconceived ideas about life insurance and just look with an open mind at the original works of R. Nelson Nash in Becoming Your Own Banker. Just with an open mind. Skepticism is good. But don't get caught up. If I paraphrase a Herbert Spencer quote, the contempt prior to investigation cannot fail but to keep man in everlasting ignorance. I'm encouraging you to push through the skepticism and look at the original works of R. Nelson Nash in Becoming Your Own Banker. If someone wishes to implement the infinite banking concept within their life correctly, the very first thing that should be done is to get your hands on the book, Becoming Your Own Banker, written by the creator of the concept, R. Nelson Nash. Get your hands on the original work. And then, frankly, go to bankingwithlife.com, go to the Learning Center, reach out, no cost, no obligation, and learn.